GM just reported its fifth straight quarterly profit, better than expected earnings and sales. For more, we're joined by Erik Schatzker, Chief Market Strategist at the ConvergEx Group. Nick has covered the auto industry for 20 years, and he once worked with General Motors CFO Dan Ammann, who will be here with us on the InsideTrack in about 10 minutes' time. Nick is on the phone from New York. Nick, so it looks better, certainly an improvement over what we've seen, and it's better than what Wall Street was looking for, certainly better than what you were looking for. So what here surprised you?
Well, the quarter was a fairly controversial one as we went through it because General Motors was fairly aggressive on the pricing side early in the quarter, taking some discounts where other automakers didn't. And I think the analytical community was pretty concerned that was going to affect profitability, but it didn't work out that way. It turns out GM had a very solid quarter, and I think just as heartening as that is that the commentary about what they see for the rest of the year, both in North America and in Europe, is fairly upbeat. So it's a solid quarter all around, and it looks like their confidence in the year is still pretty solid as well.
So does that suggest to you that what's happening, that GM has either backed off on the incentives or it is selling enough cars that the volume is countering the effect of the discounts?
Yeah, definitely the latter. The volume effect on companies like this with a very high fixed cost is profound. And it turns out that GM did do the right thing, putting some discounting in place early in the year to reap the benefits of that as the volumes picked up seasonally. And we saw that with the car sales numbers that came out earlier in the week. GM actually had one of the better gains of any of the mass manufacturers and is gaining share as a result.
Now, I'm looking at GM shares trading in the pre-market. They've actually dropped down to $32.96. So once again, we're below that $33 IPO price. What is it that, and it has been, as you know, much lower. In fact, at one point, GM was trading 11% below its IPO price. What's it going to take for GM shares to actually get back above $33 and stay there heading higher?
You know, it's more of a macro question, and it is really related to oil prices. Investors are very concerned that the spike we've seen in oil prices, and keep in mind that when GM went public, oil was $80 a barrel, and now we're closer to 100 and 110. So there's a concern that higher oil prices will take demand away from the auto industry, which hasn't happened thus far. But what has happened is it has encouraged buyers to buy lower margin, smaller vehicles than the old SUVs and large pickup trucks of, say, 10 or 15 years ago. And I think oil prices are going to have to moderate in order for GM investors to feel a lot of confidence in the sustainability of GM earnings.
GM has the Chevy Cruze. It also has the Volt. But does what you just said, that buyers are going to gravitate towards those smaller, more fuel-efficient vehicles, play more to Ford's advantage in the short term?
You know, I think both companies have done a very good job with product development on the small car side. Historically, that's a segment that this industry didn't want to invest in because it didn't make a lot of money. But they really woke up 4 or 5 years ago, and both companies now finally have very competitive products. And we shouldn't forget that the tragedies in Japan had a commercial impact as well in terms of lowering production of Japanese smaller cars and trucks, and that should be an opportunity in the near term for both the domestic companies as well.
Nick, at what point is GM able to turn its restructured balance sheet into a competitive advantage, or is that already happening?
Well, it's certainly already happening in that they're talking about having a much higher CapEx budget for this year, closer to $7 billion instead of the 5 and change it was last year. So they're already investing in the business again, which is good to see. But I think you have to also look at the Treasury's ownership of the stock as a gating element. And I think until Treasury is gone, it's going to be hard for GM to do the other things that purely private companies do, such as pay a big dividend, buy back stock, and so forth.
Are commodities costs beyond oil also going to be a gating element, the cost of steel, for example?
Historically, they are somewhat of a gating element. It's not as important to the industry as the price of oil because of its effect on demand. However, you should also keep in mind that the cost of steel and basic materials in a car amount to, say, 10% of the cost of a car. Other factors like tooling and labor play a really critical role as well. So it's a fairly small percentage of the overall cost mix.
Nick, thanks for joining us and offering some perspective on those General Motors earnings. The company beat Wall Street expectations both on the bottom and top line, but the stock is dropping in pre-market trading. That was Erik Schatzker, Chief Market Strategist at ConvergEx Group.